Well, I'm not going to lie. It's been a rather frustrating week in the markets so far. Didn't place any trades on Monday. Tuesday, I placed two. I would call them rather aggressive trades on the going long the dollar, both of which got stopped out. One of which I don't believe any of the students took because I told them not to. But we did take a long trade on the dollar yen last night when it broke out above resistance and it came down. So that stopped me out. So it's been two stop outs this week and no profitable trades. And I'm actually in one trade right now that I can bring up real quick. Although it's, this market right now, it's just, we don't have a lot of key news. The only key news from overnight was manufacturing production came out at 0.1% below expectations for the pound. They revised the previous numbers up a little bit, but that was more of a negative thing because all they did is revise them to better negative numbers on their manufacturing production for the pound. That was really the only key news from overnight as far as scheduled news announcements go. And there's nothing really coming today. Tomorrow is a big news day when we look, and most of it's centered around the pound. When we take a look at what's shaking out for tomorrow, they have their inflation report coming out tomorrow, their interest rate announcement, and then Carney speaking. So, obviously the currency that's going to be probably the most in play or the most volatile tomorrow morning is going to be the pound. And you can see here, all through the week, really, pound hasn't done anything. Just, it just, yeah, that was technical terminology right there. Just been going sideways all throughout the week, almost as if it's waiting for something to happen. We're also, you know, right now, we need to put the pound on the sidelines because I don't have a call either way on the pound or really it's been non-directional. And all this is right down through here this is just a bunch of whipsaws right in through here, no matter what direction you take on these. We have had some dollar weakness breakouts. The euro dollar broke up, to the upside just a little bit, but you can just still see on the euro dollar, you get these kind of trending moves right in through here on the euro dollar. And even though this is broken out, when you look at it in terms of where it's been, it's really just sideways also. I mean, there's not a huge amount working right now in Forex trading as far as any breakouts go. Dollar Swiss, kind of the same thing. It's finding, some resistance right in through here. Made a little bit of a double head and shoulders top, but, there's just a lot of sideways action this week and not a huge amount of volatility. The only one that really was a mover, which we tried to take advantage of yesterday, because I really thought with the way the yen collapsed right in through here, the only one that's been a big mover was the yen, which moved up, roughly, 350 points or whatnot this week. We tried to take advantage of this because I thought it had plenty of room to go to the upside yesterday, and it came down, broke down through the trend line. So that's one of the ones that stopped me out here this week. The one I'm in right now, because I did put it on the trading sheet from yesterday, was actually on the CAD, kind of taking advantage of both commodity strength. Oil hasn't been outstandingly strong, but it hasn't been overly weak this week. But you can kind of see long term with this nice move up here on the CAD that we had this little head and shoulders pattern that formed, and it's easier to see the head and shoulders actually on the 4-hour chart. But we had this little head and shoulders top form here. What we were looking for actually was, since this was right at the 2900 level, I was looking for a break below this 2900 level, which I finally got overnight. When I woke up this morning, we finally got a strong close, very reminiscent of the euro dollar yesterday. Made a strong close beneath support, and I went ahead and shorted it, and it ended up whipsawing me out of the trade. You know, here on the dollar CAD, I went ahead and took a short. In fact, I can probably bring up the actually, that's not bringing up anything. I got to reconnect my PitView to this. I went ahead and sold at one point. I had a sell entry at 1.28733 off that strong break, and then I put a stop in 50 pips away, and everything kind of looked good on this trade, all things considering. Even when this candle broke, it started making some downward move. Now it's coming back up. Not an excellent week for me right now, but I don't want to get too far down on this because I always say we're not wrong until we're wrong. And I have a limit in at 1 to 1.5 risk reward. On that break down below. The reason why I'm saying we may not have much to go on today is I'm telling you right now, if I get stopped out of this dollar CAD, I'm probably going to take a break and not put in any other trades. I mean, it's kind of been slipping and slipping and slipping. I was well above the 230 level starting the week in my account. Actually, what the hell? I don't know what I was thinking here. 1.26. It should be 1.27. 983. Sorry, I had to change my take profit level around a little bit. So in our little trading account here, this is the trade that I have on, and oil is up today. We have global markets are down a bit. The dollar started to break down through some support levels. This was breaking down through trend lines and breaking down below that 2,900 level. So this looked like a good trade. If you're not in this yet, you might already be in it because it was on our trading sheet from yesterday. You know, it is starting to make some negative on the 1 hour totals. It was -5 on the 1 hour totals when I got into it. You know, it may not be a bad idea on dollar CAD if you're not in this already to look for it to break down through these lows, and you could still put your stop right above this swing high and risk 40 pips to potentially make like 60. You could still put that in and look for a 1 to 1.5 risk reward if you're not in it yet. You can see it broke down below 2,900 where there was support. It's come back up to this and it's finding resistance there. So you might be better off here since it is starting to make some headway down. And obviously I would rather enjoy this breaking down below this low, but you could still set this up for the same parameters that I have, which is a sell entry you know, if it breaks below this swing low, and then you could put your stop one pip above the swing high, and you could still look for a limit of 1 to 1.5 risk reward. I would suggest that if you're not in this trade yet, you can still set this up for less risk on the trade, far less risk than I have. I have 50 pips at risk on this. You could set this up for, it would still be within the same parameters of what I have on this. Only in this case, if it broke through this low, you'd be risking probably roughly 40 pips or even less to make roughly 60. So that would probably be the play from there on the dollar CAD if you're not in that yet. I'm not a big fan of, you know, people always, you know, whenever I put this on a trading sheet and I say no significant news today, technicals are front and center, what have we seen in the past whenever this happens? It seems like whenever there's a lack of like fundamental data in the market, uh, it seems like liquidity kind of dries up a little bit. And with that lack of liquidity comes these short-term swing moves to the upside and the downside, these whipsaw type of moves. And that's what I've been a victim of for the last several days or going back the last 24 hours at least, are just these whipsaw moves up and down where, I've said it, I even said it on Monday, I said on Tuesday, with the market being driven by indecision, uh, sometimes it's best just to stay away. And if this doesn't hit if this doesn't hit any profitability, I can almost assure you that I will be staying away, because some of the best trades you make are the trades you don't take. And just kind of let my wounds heal a little bit before getting back into the market. One of the biggest mistakes a lot of traders make actually is just thinking they have to have something in. And I fall into that trap too, because of the fact that I host a live trading room and people are kind of like always itching to pull the trigger on something, when sometimes it's best just to stay away and just wait for things to kind of settle in. What most people will say to me, well, I don't want to miss anything. Well, you're always going to miss moves. It's just a fact of life. You're not going to hit every move that goes on. So, I'll put this one on the trading sheet for trading dollar weakness. And that's something that you can certainly look at, for a trade opportunity today. When you look at the dollar CAD on here, let me kind of pull it up over here. That's not good. Don't like it when that makes that sound. There we go. When it broke down, it was actually down in here on, it was -5 on this one, and it kind of opened right at the -5, but everything was pointing downward here on this dollar CAD when it broke down below, and it's already going negative once again. So, I would just look for that further break below that swing low before getting in on that one. Believe it or not, one of the other ones that I like today was not, from a dollar weakness standpoint, obviously I've already got that base covered. When you look at the like something like the dollar Swiss, you might say, okay, well, this is a head and shoulders top. I don't really look at this as a very strong head and shoulders top, because it's not really coming after a lengthy uptrend. It's, it's come down, it's gone back up. I'd call this more sideways type of action. But, since I am kind of betting on dollar weakness today, one other thing that I would look out for, and these are pretty much the only two opportunities that I would look out for today, is obviously I would like this thing to keep on, dollar to keep on getting weaker. And you have a little bit of a divergence here to where as this has been coming down, this has been coming up as far as the LP trend line. And you also see the fact that we got an A that comes down to approximately 61.8, not perfect, but comes down. You got a nice little ABC pattern happening here. And it is more in a sideways type of market. Euro dollar, pound dollar, dollar Swiss are all kind of sideways in there. But if the dollar Swiss can come down and challenge this 9,700 level, I think that could give you potentially a nice little entry on dollar Swiss, because of the fact that it is in a divergence state. And if it comes down to this 78.6, it's not a perfect, it's not one of those things to where this Gartley is a perfect little Gartley pattern, because it's not. But this 78.6 level down here at 0.97112 could give you a nice little entry. I would look for at least one candle to close off this 78.6 level. I would look for some support here, because if it comes down to this level, one of the things I like about this trade is just the level that it matches up with. Since we've been kind of whipsawed on any time these things have broken out, and if I get whipsawed on that dollar CAD for an example, then if I can get this down to this 78.6 level, and if I can get a bar that closes above it, it wouldn't be a bad play to try to go into a short position, or I'm sorry, a long position on dollar Swiss, just because dollar Swiss and euro dollar are both kind of in that oscillating sideways right now. Even though it looks like they're breaking out, whenever I've been burned twice on false breakouts, and so in this case I'm basically just looking to go the opposite direction and trade as it comes down to the bottom part of its trend. With the lack of news, you don't really have anything that could drive it down further. You don't really have anything that can really drive it up further. So if we are looking at technicals in a sideways market, then why not just look to trade technicals when it comes down to the bottom part of its range? So the stop right over in here would be .96965. And then if you can get that, that would be a small amount of risk, and you can certainly look for a 1 to 1.5 risk reward to the upside, or you can do limit 1, limit 2 with the limited amount of risk that you have on that, with the minimum amount of stop order that you have on there. And there we go. And that would be basically filed under dollar strength for the day. But I don't want to go crazy and showing a huge amount of trading here, because it's not that when you get stopped out a couple of times, it's not that you get scared of the market or anything. It's more of it's more comes down to the fact that you got to kind of take a step back and say, what am I really doing here? What is the market showing me? And the market has not really been showing me anything, and if you're, I always go by what my good friend Jimmy Young would say, if you love a trade, take it. If you like a trade, take it. But if you kind of like a trade, maybe you should just stay away. A lot of these trades are trades that I like, and almost border on just kind of like, to where that's where I'm sitting at from a confidence level on a lot of these. So let me go in here, and I already have that pulled down there. Go back over here to the euro dollar, see what's shaking out with that. And just for good measure, let me, I'll also bring up in fact, let me switch from euro dollar over to dollar yen over in here. Obviously, there's still quite a few bids in there for dollar yen. Everything is, even during this little downtrend right in through here, that we had, this little correction, it's still been making a lot of upward momentum. And this is, yesterday we were just looking for this to break up through a high, and then I thought when this green candle hit yesterday, I thought we were in business. I thought the dollar yen was going to start, reaping some rewards on that, because we got in here in yesterday's afternoon class, and then right when this started, I was starting to get a little jovial. I was like, all right, here it comes. This is the move we're waiting for. And then I'll obviously bam, bam, bam. But, again, we're already in a dollar weak position. So we don't have to really look. I'm already in a dollar weak position, I should say. So I don't have to really look for weakness on the dollar in these strategies. You would prefer to look for more, strength type of opportunities. You see where the retracements are happening here. You see how it's kind of come down here and made this 78.6% retracement right at the lower edge of these 108 levels. I'm just kind of flipping some ideas off of you of things that do look, good, because the yen has been really weak this week, and I figured there'd be profit taking at some point, but with how strong the trend had been and the lack of resistance from the big move down that we had, several weeks ago, I thought that this had more room to run up, and this could be nothing more than profit taking. Look at all the support down in here, the resistance up in here, and you can see right at this 78.6 level that on this candle that's coming down, things to look out for on this yen as it comes down. Again, if it breaks down lower, I'd probably be pretty happy because it would mean dollar weakness, and it would mean that my trade's looking pretty good. In fact, I can actually take this Fibonacci level off, because what we'd really be looking for here, a little inverted head and shoulders pattern. Lower low, lower high, lower low, higher high, and then perhaps a higher low. If you see anything break out from a reversal standpoint, like even if it comes down to the lower end of this and forms, let's say, like a double bottom, or it starts to form a semblance of a trend line up and through here, that's another one that you could look out for dollar strength, is if you start to see the yen break higher. It hasn't really broken higher yet. It's just been sitting here in this consolidation mode. But it could certainly, with how weak the yen has been throughout the week, it certainly has legs to run higher. It's been driving weakness in the market. But you'd want to give it a chance here. So, your buy entry, you would certainly want a close above what seems to be the neckline right now, what I'm assuming would be a neckline. The yen drops further, look for something like a double bottom to form, look for some type of reversal pattern to form in there, because it does seem like there's some support down at those levels. But if you start to see a break higher, especially if you start to see the totals change on it, I would still favor the upside on dollar yen, and then put your stop wherever this swing low is, 1 pip below swing low. And then look for a limit of 1 to 1.5 risk reward. and that's where that would be, quite frankly, that would be all I have for right now. I mean, that's all I'm going to look out for the next 24 hours. I'm going to stay away from the pound just because that thing's been whipsawing back and forth and just tightening up. And, I don't think it's a secret that I think they're waiting for tomorrow's results on for the inflation report that Carney's going to deliver, which will be a pretty accurate gauge on where they stand from an overly hawkish or dovish stance on their underlying economy. And if you don't get anything execute, like Monday is a good example of this. If you don't really get anything that executes that you like, I mean, I didn't place a single trade on Monday. Placed 2 trades yesterday that stopped me out, and then one early this morning that, quite frankly, since it moved, has not moved yet. So in these types of conditions, when the absence of any type of underlying trend or theme or prevailing trend hitting the market, better to kind of let the trades come to you and use, good confirmation. And don't be upset if you don't get a trade. And, one of the things that sometimes people do that can be frustrating is they'll want to trade because they want the action. That's what they call over trading. It's the gambling mentality taking over, of trading because you're trading for the sake of trading instead of trading because you want to be profitable. So you need to, make smart decisions there. So bottom line, already short the dollar, so I'm not looking for any other shorts. I mean, there's a lot of things that could drive that CAD up. Oil prices going up, even underlying stock market prices going up could drive the CAD stronger. Go ahead and global markets were just down slightly. So, I mean, we're not getting a huge amount of underlying volatility in the global markets either. The Dow's down like 66 points. One of the reasons why we liked the dollar yen yesterday, by the way, was because of the fact that the Dow was up like 191 points in the afternoon class, and we thought that could carry over into the Japanese session because we have such a, there's that synergy that exists from market to market. So we kind of felt that, should, the market continue up, it could, transfer over to the Japanese market, and that would bring that dollar yen trade further to the upside. Right now, global markets are just pointing slightly down, and even the Dow and S&P and stuff that's opening right now, they're not. I know Disney is moving stocks lower right now because it's down like 5%. I believe they had earnings or something along those lines this morning. So Disney's driving the market down a bit. And let me go ahead and share the trading sheet with you. So if you've been following along with all the trades this week, we all know sometimes we get the elevator, sometimes we get the shaft. We got shafted this week a couple times. So it's Wednesday, halfway through the trading week. It would be nice to get some profits working here, which would be awesome, if you will. If not, maybe step away for a little bit because not a lot of these moves are sustaining themselves. So with that being said, I'm going to go ahead and jump off here, and I will chat at all of you tomorrow morning. If you do have any questions, shoot me an email. Hopefully everybody's getting the emails now, and I will talk to you later. So thanks for coming in, everybody. I'm going to go ahead and stop.